Hey, this is Justin with DayTradeTheMarkets.com on an interesting day. Today's Friday, September 20th, and I wanted to look at quite a few things today. I wanted to look at the gold market and the E-mini S&P and talk about a few different things. One, talk about handling gap opens and things that do with that. Two, talk about what we consider to be one of the strongest indications that we look at, which is when we have what we call level 3 or extreme buying and selling aggression bars on the high or low of the day, and what those mean and what those can tell you about what's going on in the day. And I also wanted to talk about what we call a conflict situation when it comes to trading and how you can handle that. So let's just get to it. Let's look at gold first, and this is a gold chart, 2-minute chart, and just so you know, you can use this on literally any time frame, from micro scalping time frames to swing trading time frames and so forth. But again, this is just a 2-minute time frame, and you can see that in gold we gap down from the close yesterday down to here. We typically consider gaps from yesterday's low in here, and so when you have a gap, just as the first thing to talk about, what we like to look for is some people just automatically buy and sell gaps expecting them to close. Some people go with gaps. We like to look and wait to see what the evidence is telling us before we kind of really make a decision on what to do with a gap. And by evidence, what I mean is, just as a review, our software looks at a lot of different pieces of evidence, both in real time, and also we do some analysis in our member center that's bigger picture. But especially what I want to focus on is what we call our relative aggression bars. That's kind of our first building block, first piece of evidence that we look at. And to give a little more clarity about that, these relative aggression bars are looking at order flow. They're looking at a few other things, velocity, range, that sort of thing. And they're trying to determine which side, buyers or sellers, is more aggressive at a given time, because it's aggression that really moves the market. And so what this software is doing is it's telling you which side is more aggressive at a given time. It's also telling you to what degree that aggression is happening. So we've got these level 1 or moderate buying and selling bars, aggression bars, level 2 are strong, and then level 3 are extreme buying and selling aggression bars. And we really want to focus on these extreme buying and selling aggression bars and these strong ones as well. The level 1s are giving us good information, but this is really what we want our focus to be. Okay, so if we go back to the gold chart, and again, the context is we've gapped down, but rather than just buying it automatically, let's wait for some evidence. And you can see the second bar of the day, we get a level 3 or some strong buying aggression. We get some immediate follow through. That's telling us not a bad place to be a buyer. Okay, so this thing almost fills the gap from yesterday's close. And you can see here is another interesting thing that I want to talk about, and that's what we call a level 3 or extreme buying aggression bar on the high of the day. Now, when we have one of these, this is telling us typically that this is the beginning. 7 out of 10 times it's the beginning of a nice vertical move higher, or it's capitulation. Okay, and the way that we determine what's likely to be the case is we wait to see if there's follow through quickly above, and or if the low of this bar can hold. Okay, and so that's our first expectation, is that the low of this level 3 extreme buying aggression bar should hold. And you can see it, we tested right down to the low and actually came back and met our first expectation, which is the high of that bar right there. But we couldn't get a full bar above. We couldn't get really any follow through above this. Okay, so that's a little bit disconcerting in terms of this market moving any higher. Certainly it fulfilled its first expectation. It tested to the low and tested the high, but we couldn't get higher. Okay, and then you can see that shortly thereafter we actually took out the low of this bar, and we had several full bars below, started to get some level 1 selling, and then you can see, so that's a very good indication that potentially the high is in place. Okay, when a level 3 buying aggression bar on the high of the day does not have follow through, it's very often 7-8 times out of 10 signifying that the high of the day is in place. Okay, so then you can see that when we tested at that time the low of the day, and we did so on a level 3 extreme selling aggression bar, as well as this high velocity move, which is what that box is, that's giving us very good evidence. And you can see immediately we had follow through below. That's giving us very good evidence. Number one, a failure higher and then a breakout lower. Okay, it's giving us very good evidence that sellers were very much in control of this market. You can see our filter was strongly bearish at the time as well, and it's telling us that we certainly want to be on the short side, not wanting to be on the long side. So there's a few ways you can certainly make that trade. You can just sell the breakout, which is one way to do it. You can wait for a retracement back to the high of that bar, which certainly didn't come. You can also wait for a retracement back to the low of that bar, which almost came but didn't quite. You can also do 50% retracements, that sort of thing. You can additionally, you can see it, wait for failures of buying bars. You can see that buying bars came in and they really had no follow through at all. They were what we call failures, rejections. So it was clear at this point we didn't want to be on the long side. That was even doubly clear when these buying aggression bars none of them had follow through. They had immediate rejection. Those are giving us some good information as well. You can see toward the last quarter of the day we had another strong sell down as well. So again, just looking at the gold chart real quick, talking about two things: gap fills and waiting for evidence on that, and then number two, looking at extreme buying aggression bars on the high of the day or extreme selling aggression bars on the low of the day. So that's a couple things. Wanted to look at the E-mini S&P as well, because this was a very interesting week. And just to give a little bit of a bigger picture view, bigger picture is relative, but just to squeeze everything in a chart, I've loaded a 5-minute chart to start here. Okay, and you can see a very interesting, month ahead of the Fed announcement, the market was relatively quiet, was in containment, couldn't get through the resistance zone as it tested 3 days in a row, tried to sell off, really couldn't do much selling, and then when the Fed announcement came on Wednesday afternoon, we had this huge rally, and you can see that when we broke out on this level 3 buying aggression bar and had a few more level 2 buying aggression, it wasn't until the very end of the day we started to see a little bit of selling. Okay, and then in the overnight heading into Thursday, we tested a little bit higher, but as soon as we opened on Thursday, you can see that we had some level 3 selling aggression, and then when we had some buying that came in, it got rejected, more level 3 selling. Same idea this morning, where we had a little bit of a rally in the overnight, not much, but from the close, and then we opened with some really strong selling aggression, extreme selling aggression, and you can see when we had any buying aggression that came in, it was rejected. Again, that's telling us that you certainly would want to be careful on the long side. But this brings up an interesting scenario. It's what we call a conflict scenario in trading, where our bigger picture bias, we like to look at our bigger picture bias and our short-term structure. Our bigger picture bias has certainly been up, and that was confirmed on Wednesday. But then on Thursday and Friday, these days, intraday or shorter term structure, they were controlled by sellers. Okay, so how do you handle that? Again, that's what we call a conflict situation. And just to clarify a little bit about that, we talk about our bigger picture bias. That's looking at the past few days, past few weeks, and we talk about that in our member center in terms of what we expect heading into a day. Then we have our shorter term bias, which is our structure, what's going on in real time with the order flow of the day, those level 2 and level 3 buying and selling aggression bars. Okay, so obviously the ideal is when you have bigger picture biases up and the shorter term structure is up, you've got everything in alignment. Things are in flow. You just roll with it. You go with it. But there are, or vice versa. If the bigger picture bias is down and the shorter term structure is down, you go with that. But there are situations like what we saw the last 2 days where the bigger picture bias has certainly been up, but the shorter term structure has been down. Okay, so it's conflict. Okay, so what do you do in a conflict situation, just generally speaking? Well, if you tend to be a trader who focuses more on the short-term structure, then you're going to want to focus on what's going on in the here and now. If you're a trader that's more of a swing trader, someone that's more focused on what's bigger picture, then you're going to want to wait until you see these things back in alignment, until you see some short-term structure that's bullish to match the bigger picture structure, or else you're just going to stand aside and wait for things to line up. Okay, so I think there's no right, there's no wrong. It's more about understanding what's going on, that the bigger picture and the shorter term are not in alignment, so that you can adjust to that and make the best decision for you. And just to elaborate a little bit further on that, here is a 3-minute chart. And I typically look at a 1-minute chart. I'm just trying to put more onto this screen for now, so I'm using a 3-minute chart. But you can see, again, here's our breakout on Wednesday. This is when everything was in alignment. Our shorter term structure clearly was very bullish, and it matched our bigger picture bias. You're looking for any opportunity you can, and I did a video on Wednesday of some different trade opportunities that we had in there. You can check that out as well. But then yesterday, Thursday, and today, certainly our bigger picture bias was up, but you can see our structure was certainly down. So if you're going to be on the short side, you just want to know that you're swimming upstream, so to speak. It's okay to be on the short side. The structure is giving you good evidence to do so. You just want to be what we call nimble when you take those trades. And a lot of times we'll look to trade, less risk. Instead of selling, for example, a breakout, we'll maybe wait for a retracement toward the 50% or toward the top of a level 3 bar, for example, like you see in here. Okay, same thing here. Wait for it toward the top of a level 3 bar. You have less risk. Okay, and that's those are some good opportunities to get short, and you just want to be nimble. Take a little bit less risk on those and make sure that it goes in your favor pretty quickly. And these certainly did. This was confirming that the short-term structure really was bearish, but you just want to know that you're not completely in alignment. The market's in a bit of a conflict situation comparing the bigger picture and the shorter term, and so you just want to be aware of what your style is. If it's more of a short-term trader, then you want to just jump on board, but know that you want the market to move in your favor quickly. You want to take a little bit less dollar risk per trade, maybe wait on more of a pullback rather than just jumping on board types trades and that sort of thing. So hopefully that makes sense. I know I went through a lot of information on the public video tonight, but I think there was a lot to talk about. So let us know if you have any questions. You can certainly put some comments in the comment section below, or questions below, or send us an email, info@daytradethemarkets.com. We'll get back to you as soon as possible. All right, talk to you soon.